morning.
Good morning. Good morning, everybody.
Happy Friday.
Spencer, it's great to have you.
Good to be with you guys. Thanks for having me.
Yeah, so Spencer, I think we've done a couple of podcasts in the past, if I'm not mistaken, two.
Sounds right, yeah.
Yeah, and this is the first live show that we're doing together. So welcome everyone to today's Freight Gong Friday. Spencer Tenney, CEO and president of the Tenney Group, which does a lot of logistics M&A. You're an expert in the mergers and acquisitions part of our industry, and there's a lot of noise going around these days with companies getting acquired. There was a lot happening last year, so happy to have you back on the show.
Noise? What do we call it? Noise, Paul?
Well, what would you call it?
I don't know. I don't know if it's noise or like ever since I think the Trucker Tools acquisition took place, and then after that, it just seems like that the deals just keep heating up, from what I can tell. And I don't know if it's, I don't know, Spencer, what would you say? Is that how'd you
well, from my vantage point, gentlemen, it sounds more like music to me. It's extremely encouraging to see, what was a lot of pent up inventory of deals that probably should have transpired in 23 and 24, finally get traction in 25. And I think for those that, might have been on the sidelines, kind of taking a wait and see posture, it's very clear that conditions are stabilizing and very encouraging about what's taking place. People using M&A to go advance their current position. So I'm very excited. I think it's great news for everybody that's trying to create value in this space.
Yeah. Well, Spencer, before we dive in, we'll have the annual report that you all put together here in a second. Can you give our audience just a quick glimpse into your life, what you do, and what you specialize in, just more clearly?
Right. So I'm CEO of the Tenney Group. We're an industry specialized M&A advisory firm. It's been dedicated to this industry since 1973. Most of what we do, I would say probably 80% of our practice is around sell side representation. So someone, builds a business in the either, asset-based carrier, a freight brokerage, freight tech, and they want to exit. We help them maximize that experience, increase their optionality and what that's going to look like, make it as seamless as possible. And the other 20% of that is where we're helping buyers. Maybe they've reached a problem. Maybe for whatever reason, they can't get access to their priority acquisition target. Maybe they have a problem that they're trying to solve around a table that they just can't fix between buyer and seller. We also provide expertise in that area as well. But most of what we're doing is we're the target company, no matter who we're representing. Most of the target companies represent somewhere between 3 and 25 million in EBITDA. And that's where we think we bring the most value. And that's where there's a lot of value creation taking place. So it's a fun place to be.
Spencer, how many companies within that range exist in the United States? I'm just curious.
It's from our estimation, if we're just talking about freight brokerages and asset-based carriers,
sure,
somewhere it's a couple thousand.
Couple thousand.
Mm-hmm.
Yeah, I love this topic, Spencer, because I feel like every entrepreneur wants to build a business that is sellable. Even if they don't want to sell it, they want to know that it's available, an option on the table. And we discussed this before on previous podcasts, and I've read the book Built to Sell, and it gives you kind of like the blueprint in some ways of how to actually set out to build a business that one day someone will actually want to buy from you. Aside from that, there's the annual report that you put out every year, and I think it came out recently that will get pulled up here. And I guess it would be interesting to hear from you. How do you set out to building up the annual report, getting all this information for 2024? How did that look like? And we'll start diving into some of the takeaways from 2024 and 2025 that you're observing right now.
Yeah. So what we want to try to do is, there's really good third party data aggregators that are doing global transaction value, volume data pools. And, so we pull a lot from S&P Capital IQ, and we use their data. Because it's very helpful, but it's also it can be limiting because it's usually only capturing transactions that are kind of at that 50 million and above threshold. So there's still a ton of activity that's happening below that. That's really important to help people understand how to navigate during, each M&A cycle. And so what we're trying to do is marry those two things, get that data, and then marry what we're seeing internally on real-time transactions, and then trying to present something to the industry through this report that is, both applicable and actionable.
Spencer, that's that data from S&P that you mentioned. Those are basically public transactions of acquisitions or mergers that they somehow collect.
It's public and private, and
Okay.
and I think that I think the deal is it would be impossible for anyone to capture every single transaction across every mode,
Sure.
globally. So I think it's just more of it's a helpful directive to kind of help us understand what's happening, but it doesn't in any way encapsulate everything that's happening. But it does give us some helpful insights about what's happening in the market and why.
Which of these deals in 2024 was one of the more interesting ones to you from your research?
One of the ones that we cited in the report and then in the commentary that we followed was we really like the Schneider and the Cowan System deal. I think that was a very smart, very disciplined deal on their part to double down on the dedicated side of what they were doing. And also, I think that it was just also symbolic of a large trend that was happening in the market. When you had that much disruption in the spot market, it's really important for people to get insulation, to get stability in the way that they were growing. And that was also one of the reasons why we saw the acquisition of dedicated carriers, or at least the pursuit of them, at a record high this last year.
And a record high means how compared to, like, I guess 2023 was.
I don't mean like a record high in volume in terms of the actual deals themselves, but I think from our standpoint, like, we've never seen that much focused interest in experienced, capable acquirers pursuing that specific profile.
Interesting.
Yeah.
This market of M&A right now, what is that equivalent to in other years? Have you seen it? Like, can you compare it to a similar year?
Yeah. So for context, in 2024, we ended up globally with about 80 billion total transaction volume in the T&L space. And I got a couple quick notes here for context. 23 was a 35 billion. It was a huge dip. I mean, and because you think about what was going on at that time, we had the most accelerated hikes of interest rates in American history. I think we had 11 of them, but the freight market was nosediving, and so those conditions made it extremely challenging for buyers and sellers to get alignment on valuation. So most people self-elected out because they're just like, this is going to be a waste of time. I got so many problems to solve in my business and try to just keep it on the rails. I don't have time to work on these deals. But if you go back into 22, it was 193 billion. Of course, that was just kind of wild west year.
That's when money was flying out the window.
Yeah. So
for like the first quarter, right? Because then it dipped drastically too, like it trickled down, or I don't know.
Really, I mean, it really kept going through until probably. I think it was really till Q1 of 23 that just the bottom.
Got it. Okay.
Happened, but it was kind of guns blazing.
I think Bezos and like Zuckerberg, all them. I think it was like November 2022 when they started basically selling. And then after that, it was like, I think it was like roughly right around January.
I misspoke, guys. It was 193 in 22, down from 21, which was 233 billion. And so, so you were right. It was actually, it definitely started tapering off in 22 dramatically, and that 21 was the primary year.
Okay.
But obviously you look at that trend and you kind of look at, the first half of 2024, it was 30 billion in transaction value, and then it really started escalating with 55 billion in the second half, which to me, and now we're riding that trend into Q1 of 25, and it feels like it's going to be a pretty big year based on what we're seeing.
I think we're off to a hot start.
Yeah,
it seems like so far.
But what have you seen?
Go ahead.
I'm just curious, like what have the first 2 months of the year, because today's the last day of February, what have the first 2 months of the year brought to you? Have you been pleasantly surprised with all the transactions ongoing? Like, and what do you expect for the rest of the year to look like?
Yeah, I mean, from our standpoint, we're expecting a really big year. And I think that the biggest thing is, I would say for 23 and 24, and I think the rest of the market, like we're just kind of a byproduct of what's happening in the larger market. Most of our deals, the most common characteristic of the deals that got done were companies that had, some type of specialty, highly insulated from both, the global economy, but also the freight market. And so those deals had stability. They were valued at a premium. And because of how suppressed performance was across all of their verticals and sectors, they really popped and they really presented well. And that's why they got done. But they were also smaller. And so I think the biggest shift coming into 2025 is that finally, some of these larger transactions, buyers and sellers who wanted to make big, strategic, transformational type plays, now they have the conditions where they can go do that. So I think you're going to see both a major increase in the quantity of deals, but also, and probably more significantly, the size of the deals. That's going to be the main feature of 2025.
Yeah, it didn't seem too much like the last, last few years. At least it was like people were very hesitant about doing any form of M&A, and that there was kind of it was a lot. There was a lot of hesitancy, just given that regulatory approvals were uncertain and the kind of whole framework. But now the playing field seems like it's very welcoming to a lot of these deals, which is I think accelerating. I mean, I can clearly see that obviously from these transactions that have been taking place, and from my vantage point, it's mostly the freight tech acquisitions that I've been basically paying attention to. But it's very interesting to hear from your side, the kind of the asset-based side, and the operators, how they're doing as well too. Do you have data on 2025 yet? Maybe you said that already.
No, we don't have any of that just yet. I mean, just anecdotally, what we're seeing internally, I think we're seeing significant increase in, companies in that kind of 10 million EBITDA and up, coming on board and coming to market, which a lot of those folks, because of the size, and it's material. Like if the market is not ideal for them, in some cases, it does make sense for them to wait out for another cycle. But we're seeing so many of those come back and positioning themselves for an exit. I think it's going to be a really big quarter, and a lot of that, guys. There's the capital markets. There's what's happening in interest rates. As long as that's stable, that's good. Freight market's not ideal, but it's been continually and steadily, incrementally increasing in terms of its quality. But the other thing is the election, and no matter what your politics are, people don't like making big decisions when they don't know who's going to be president and what the regulatory environment's going to be for the next 4 years. And I do think a lot of people in our space believe that it's going to be more favorable in Trump with the Trump administration. But I think the key thing is when you're in election year, you typically see a little bit of hesitation in that Q4 till the dust settles a little bit and people know what they're working with. And so I think some of that stuff that might have happened in Q4 pushed into Q1 of 25, which will probably even have create even more of a bump from an M&A activity.
To that point, we even saw a bunch of companies that were planning on opening. I think it was automotive companies that were planning on opening factories, for example, in Mexico, and then they just put that on pause. Like I think it was as early as August of last year, without certainty of like what exactly is going to happen, because everything can turn upside down in one day.
Yeah, and the deal is it's not that they won't do the transaction. It just affects how they approach it. And so you got to know where you stand. It's just like in 2023 where people were like, I can't do a deal right now when interest rates are continuing to go up every month. I don't know what the true cost of this acquisition is going to be until the market levels off. So it's the same principle.
Interesting enough, Spencer, we've had 4 of our sponsors, advertisers in freight category get acquired since I think it was December, because Trucker Tools got acquired by DAT, then Isometric Technologies got acquired by Triumph. Afterwards, TexOK got acquired by 10th Street, and then Green Screens just got acquired by Triumph. Curious your maybe thoughts on any of these acquisitions, like what maybe like were you shocked by any of them? Because like just for example, this week, Green Screens was announced they're getting acquired by Triumph, pending regulatory approval, but it was $120 million in cash, $20 million in stock, and I'm like, wow, like that's insane.
Crazy.
Green Screens has been a sponsor advertiser and Freight Caviar like almost since the beginning of our newsletter, and so I don't know, maybe it was because of they were sponsoring us that they did so well. I don't know, but I'm just kind of curious if you could give us maybe some of your thoughts, observations from all these deals ongoing, and shout out to all of our advertiser sponsors.
Yeah, well, my analysts they all concluded that it was directly your involvement that created this.
I love that. I'm using that soundbite.
So no, I think that each of them have their own characteristics. I think the broad thing is I think it's an exciting time. We're coming out of a period where 21, 22, there were some big plays and that kind of became cautionary tales as far as some of these moves, more on the venture capital side. But I think that what we're seeing now on the freight tech are very thoughtful and disciplined strategic acquisitions here that I think that are very exciting for the space, because I think what happens when you have so much technology enter a space in such a short period of time, it becomes very difficult for all of those to be winners. And so I think what you're seeing right now is folks really making decisions about teaming up, locking arms with the right partners that can help bring the most value to the customers. And I think that's kind of a characteristic that you're seeing in all these plays. And, I'm excited to see some of the folks, Green Screens, we both had that group on podcasts and stuff. I'm excited for that. It's a big win for them and they deserve it. So that's excited for them. And I think that there's going to be more and more of strategic plays like that specific to the freight tech space as we get further and further into 25.
This seems to be Triumph's second deal already of the year, because the first one was our friend
Isometric Technologies.
Isometric, also a freight
Technologies.
sponsor as well.
Yeah.
And was that in January? That was in January, right? Paul?
It's all blending
That might
together.
Yeah, that might have been January. I think it was January. Yeah, it sounds about right. January. Yeah, so a month ago. So
they seem like they're on a hot streak here. Triumph. That is.
Yeah, I think that there is, an acquirer like Triumph is well capitalized. I think they are uniquely positioned to capitalize on a lot of these, this other technology that's developing that maybe they don't have the complete talent or pockets to fully realize their own potential. So I think some of these plays, and I think that's why you're going to see Triumph do probably a handful of more before the year's even out, for that reason. I think that it's the combination of the capital and the talent and the synergy between the existing platforms that creates that value for the end user. And so I would expect them to do maybe a couple more before the year's out.
Very interesting. Spencer, have you seen an increase in terms of like in a number of companies reaching out to you in like recent months of like trying to get a deal done? How has that changed year over year? And are you typically getting calls from brokerages or asset players or freight tech? Do you have like a breakdown you could share with us?
Yeah, it's a little bit of it's a little bit of a mixed bag. I think that the what we started noticing in probably September of 24 was the feedback that we were getting from kind of like really prolific acquirers was that, hey, we're not going to hit the objectives that the board's laid out for us. Like we have no path to get there. So that now the attention is like, what are we going to do different in 2025 to make sure that we catch up for what we didn't get in 24 and exceed our growth goals for 2025 via acquisition. And so these are folks that are highly experienced. They have tremendous internal resources around corporate development, but for whatever reason, they're just not getting to the right deals at the right time, or they're getting outbid. But either way, what we noticed was probably the largest inbound amount of inquiries that we've ever had for people that saying, hey, we need some type of edge in our effort to go out and grow via acquisition. And for some folks, that's just like, hey, we can't get to this person. We don't know why. Maybe there's a personality gap between our priority target and our company, but for whatever reason, they won't engage. They won't return our calls. So whether it was for speed, whether it was, they needed a buffer between the two parties to help get something done, it was clear that very capable acquirers who've done a lot of deals were understanding that the market was going to have some urgency in it, and they needed to do whatever they could to try to give them an additional competitive edge. And so I think that's just kind of like a little bit of a visual of what's happening right now. You can see the urgency, and Christian, kind of what you're talking about. You're feeling it, you're seeing it, but you can imagine like what the buyers are feeling because of how heightened the overall competition is. So there's pressure on valuation. People trying to get deals without having to pay more than they have to, and they recognize that good companies are getting pursued, and they're going to have to differentiate either in the way that they offer, the way that they structure the deal, the way that you mentioned the green screens about the stock. I'm sure that had a lot of sizzle from in terms of getting someone excited about it. So whatever it is, I think that the trend is that buyers are having to differentiate and augment the strategy that may have made them successful in the past.
Mm-hmm. And with the green screens deal, it is pending regulatory approval. Spencer, can you tell us a little bit about how that works, like since Triumph is a publicly traded company?
Yeah, I mean, most of that, I mean, that's just part of the process. I mean, unless it's unless it's an issue of that would create some type of unfair advantage,
Like monopoly.
Yeah, then that stuff's more of a formality than anything else. But it's a process that every publicly traded company is going to have to go through that. And so, I think I think we'd certainly consider that done. If this was a much larger deal, maybe, but generally that's just a part of making sure our laws are protecting the people from monopolies and other things that are not fair.
Got it. Very, very interesting. Well, congrats to Green Screens on that.
Yeah.
To Triumph.
Spencer, how long have you been working on your company for?
So I grew up in the business. My dad started advising on M&A deals in transportation world in 1973.
Okay.
And so, I went out. I tried to avoid it as much as I could, gentlemen. I went out, did some music for a while, then went healthcare. But, when I was at a very young age, I got to see what it was like to help an entrepreneur who, started with, maybe one truck, a credit card, and a prayer, turn that into maybe a couple thousand trucks and truly realize the American dream. And so once you get a little taste of that, it's a pretty amazing thing to be a part of. And so, unsurprisingly, I found my way back into that after I experienced some other things and just realized that nothing really can compare to that, helping business owners who've done something spectacular to finish the right way.
I think that's one of the coolest things about being in this industry is experiencing that personally myself, or at least seeing that multiple times here, for example, in Chicago, a lot of immigrants coming to the States and basically starting from nothing, and then growing their companies, moving to a country that they don't know the culture of, they don't know, how things work here, and then figuring it out and actually kind of being on the sidelines, seeing that American dream multiple times over come to life. It is not only is it really encouraging, but it's just really awesome to see. So it's definitely a big plus for being in the in this space from my perspective, which is it's awesome to see that.
No, I agree. I get so much energy when I hear these stories, and I'm reminded of a friend out in Chicago, and he had a wonderful diversified logistics company, but he talks about coming from Eastern Europe and then coming here, and it was just a luxury. It's like he was working construction and got to have grapes every day for lunch, and it was because that was like a delicacy. And every time I hear those stories, I'm so inspired, but I'm also energized because when you're born here, you can often take some things for granted, but when you hear someone doing that, they had nothing to work on, and look what they're doing is like, I have the ability to kick this up a notch, and so I love hearing those stories, and I'm so energized every time I hear them.
Yeah, there's definitely a lot of that in Chicago with it being a Eastern European hub, but overall,
there's, I guess, in this annual report, we're going to be going into 2025 thoughts. So I'm kind of, or predictions. Sorry about that. There's some good predictions you're making here, Spencer. You want to tell us a little bit about the predictions for 2025?
Yeah, I think that one of these things that we talk about, the Trump bump. I think this is more so
The Trump.
Yeah,
I never heard that.
the Trump bump. I might have to trademark that, but
You might have to.
no, I think that there's a lot of folks that have been hurting. This has been a brutal slug for the last 36 months, no matter where you're at in this space. And for some people have drained their operational reserves, and they're kind of limping to where we are right now. And unfortunately, the freight market, though it's getting better, is not getting better nearly as fast as we would like it to. And so the sentiment of this prediction is there's a lot of folks that are going to unfortunately overestimate what the Trump's effect on the economy and how fast it's going to be. And more so, they're not going to make the connection between what's the real impact to the value of their business. Even if, like, a lot of folks don't do the homework to find out what their business is worth now. And if they double down and they do all the work, and everything goes right, what's it actually going to be worth in 1 or 2 years from now? And so what my fear is that a lot of people are going to do all that work, and they're going to be very disappointed by what it actually creates for them. And so I think that it's more of just, based on what I'm hearing, a lot of folks are going to double down. They're going to take risks that probably are not going to provide a sufficient return. It could put them in this is one of the highest risk industries you can be in. And so I think that the caution is, like, there's people are going to take risks. It's not going to provide near as much upside as they think it is. And I just think it's an unfortunate thing. So my hope is that they'll educate themselves, and they'll make the right decisions, either find a stepping off point, or they'll be very cautious about how they reinvest, making sure that those investments are providing an acceptable return.
Spencer, did you follow the Twitter acquisition when it was taking place? Unrelated, but did you happen to follow, like, how that was taking place and over, like, the course of the next year after it finished?
I mean, I was. There's.
I'm going somewhere with this, and
yeah,
mainly because the way, from my vantage point, I'm curious to see how you think about it. Is that it seems like, it's given that it's basically the same team, of people in the now current administration. The way I look at how the forecast for the next year will be may somewhat similarly resemble that of what we saw right after that initial Twitter acquisition, where things were there was a lot of cost-cutting measures that were implemented in place, and things were a little bit shaky, unstable, potentially at the company. And then over time, they kind of rebounded back once they got their economics, under control and so forth. And from just the reporting of obviously what's taking place at the White House now, they're doing taking a similar strategy. So I think when people were going into the election in November, the expectation was that there will be this immediate kind of Trump bump, but a big, whole kind of campaign bullet point was around, like, the cost-cutting measures. So we will probably see a kind of a reversal of this trend. My guess is within a year, maybe 2026, as something around that time, maybe a little bit after that. But I don't know what your thoughts are on that, if you see any resemblance there.
Yeah, I think that it's interesting to me to have economists kind of speculate on this, because there's no moment in history when you've had this much complexity condensed in this short period of time. I think the whole Trump economic thesis is, like, all of this baked in, not any one particular thing, but all of it baked in: wars, major cost cutting, tax cuts, open up, streamlining regulatory environment. In the blend, all of it is going to create an explosive economy. But I think that what's fair is that, if any one of those things has a significant amount of disruption as part of that transition, then it could have profound short-term impacts on the economy. And so I think that's why I think that, but, politics aside, I think this is one of the most fascinating times to be alive. Period. Just watching what's
Really?
happening, watching what's happening, and just out of sheer curiosity, can he pull this off? And but I think from a business standpoint, and I think on that, to be specific, like on the prediction itself on the Trump bump, I think that's more specific to your smaller operations. I think that's what that's directed towards. I think for the larger ones, I think they have many more ways to be strategic and to advance their position, irrespective of what's happening, kind of geopolitical type background. But I think on the other ones, they don't have the reserves, they don't have the pockets, they don't have the optionality to kind of navigate some of these things if this ends up taking 12, 18 months to really start improving. And so that's my concern. And it's more just, I've seen this happen too many times with a lot of folks who, give it all they've got and ultimately don't have a lot to show for it. So that's more about my little bleeding heart there, but I'm just trying to look out for folks, make sure they don't get in over their head if they don't have to.
So from what I was hearing earlier, Spencer, and right now, you're a little bit cautionary for buyers, I guess overpaying for certain valuations, and
I don't think that's it. I think that it's more about, I think just being realistic about the speed. If you've seen any of my seminars and when we talk about buying, I think that for really great companies that are going to attract, and they're going to have a lot of demand for what they have. So I think that experienced acquirers, whatever it made you successful in the past, I think that you just really have to self-reflect and find out, is that going to be sufficient in this type of market? Because you're going to have to move at a pace that you may not be comfortable with. You're going to have to engage and to kind of put some financial proposals, perhaps with less diligence on the front end, to actually get on the dance floor. I mean, some people, we've had deals where they're like, hey man, we weren't even ready yet. I was like, I'm sorry, my client was ready to move, and y'all never got a chance to put an offer in because they've already have 4 or 5 offers. They don't need another offer because they've seen enough. If you're not moving if you can't get your team and you're not functioning at an elite level, and you're not kind of adapting or evolving to what the market requires to be in the right conversations, then that's more my, my call out is just say, hey, whatever you got to do to evaluate, how do we be good stewards to provide enough diligence on the front end so that we can understand what's the right investment thesis for us to go and make a good play for this deal without, paralysis by analysis. And I think that's kind of like the enemy of all the deals. Get in here and start allowing your analysts to hijack what good business people just instinctively know, much like all the deals that you decided, all your sponsors. I mean, that's just instinct. They knew that that's the right deal. They're going to get it in. They're going to kind of conceptually map it out, and then they work the details out in due diligence, not vice versa.
Okay. And I'm curious, Spencer, we have a large freight brokerage audience. Let's just say there's an owner here listening to us right now, and he's like, hey, I want to potentially see what's out there. Can you walk us through that, I don't know, blueprint of selling a brokerage, specifically a brokerage, and reaching out to you, for example, and seeing how does that whole system look like, or the whole process look like?
No, and this is great. We had a great conversation with freight brokerage, and they're probably close to 4 million EBITDA, and. And I think the conversation that I've had with them is that they've had a very specific goal, probably for the first, for the last 3 years. We have a very specific vision. We want to get to, I think it was maybe, it was a certain outcome. We want to produce this financial outcome. And so the conversation that I like to have is just, I say this all the time. Well, I just want people to stay educated, stay agile, because your goals, your life changes, whatever. I mean, Paul gets engaged, maybe he has a whole different look on life next, so the conversation was, okay, well, let's talk about that. That's the financial goal. Why is that financial goal significant? All right. What do you really have to do? How does the business need to evolve to get to that point? And what ends up happening when you can start walking through that, people start talking to themselves like, well, is that just kind of like an ego goal, or is that something that's really meaningful to me? Because what I really want to do as we start talking about this, I really just want to work with great people, and I want to build something that's cool. And that's what I hear a lot from freight brokerages. They want to be a part of something that's innovative, that's leading. And the reality is sometimes it's hard to do that all by yourself. And so for us, like when we're going through this process, we want to understand clearly, what are your goals? Why are you doing what you're doing now? How is it accomplishing your goals? How is it not? And how would exiting advance your position? How would and how would staying and growing and doubling down, like how would that advance your position? And once we can kind of go through this series of this kind of self-analysis, what we can start to begin to do is identify an exit path that's going to allow them to have the best of what they want, either the maximum economic goals without taking any unnecessary risks that they don't want to take. And once we kind of reach that point, that's usually when we say like, well, hey, we're at a point where we got enough of the financial goals that we think we can accomplish that. If we can go partner with somebody else to kind of help us get the rest, either through some roll forward equity or whatever, then we can do it that way. When they hire us, the biggest point for us is we want to make sure that we understand the business. We want to understand how to protect confidentiality. We want to understand like what is the growth narrative? What's going to capture the imagination of a qualified buyer, get them excited. And that could be a host of different things, but it's also why so many freight brokerages don't get what they deserve at the point of exit, because they have not really, because when you're too close to it, it's just very hard to understand like why would somebody want, what can somebody do with this that perhaps has unlimited capital or has some type of strategic customer base that they could cross-sell or whatever it is. So the point is when we build that story and then we start understanding who's the right buyer for that story, and we build a profile, and then we start engaging those people. And then it's at that point that we're understanding, and part of the buyers that we brought to the table at that point is that we know them, we understand what they're trying to accomplish, and we're marrying the two together. And then once we are able to kind of bring them into a structured process where there's some timeline and some guidance, really what we're trying to do is in a very streamlined process, have multiple offers for a seller to consider. And it's very important because once you have multiple offers with different structures, you're becoming educated and you're getting comfortable that number one, you're getting a good sampling of the market. But number two, like you can trust your ultimate decision because you know that you're not leaving money on the table because you've seen a variety of different things. And it's often at that point that if you are going to leave money on the table, it's because you like the partner better. And you just think you're going to work better with them. Or they have a more compelling roll forward equity process. You trust their growth strategy. You like the role that you're going to play in that. But I think that's the main thing. When we go through that process and we run through those options, it's about getting the deal. But for a lot of people, there's other non-economic goals that we're trying to address through that process. And so, getting through that, we get all that lined up and then going through due diligence, which, can take anywhere from 60 to 120 days, depending on the size and complexity of the business. Freight brokerages can sometimes be pretty simple or more simple than, some of the complexities on the asset-based side. But that's it. I mean, generally you're talking about 6 to 9 months on a lot of these deals. If they were larger, maybe 12 months. But yeah, and it's a beautiful thing when we can get in there. Our philosophy is it's always about do no harm. We want to make sure that if for whatever reason something happens, we never get in a situation where the client or the effort to sell the business could create harm for the client. And so that's how it works. And then I always like to tell people that when from the confidentiality standpoint, everything the way that it should happen is that everything that your advisor is using in a sales process should be pre-approved by you. So what it is. And so there's never a situation where someone could, this has got to be one of 5 different companies because based on these bullet points that, if that happens, then someone's doing it wrong. So if it's through the collaboration of the advisor and the owner to say, hey, we want to try to be as compelling as possible, but as generic as possible to get the maximum interest. And then once they sign a non-disclosure agreement, we can start, disseminating more sensitive information, but only at that point.
Okay. Got it. What's interesting for me on the advisory side of things of merger and acquisitions, like you're you're building relationships. You're a broker. You're building relationships with people that want to sell their businesses, and you're building relationships with people that want to buy businesses. Can you tell us a little bit, Spencer, on like building relationships with buyers? Like, how does that look like? Like, because there's a limited pool, I'm guessing, of buyers. Like, I don't know how that typically looks like, but just kind of curious if you could give us like, a look into that world of things, like who has the money here, how do you have conversations with them? Go ahead.
Yeah, there's there's kind of an infographic in our annual report, and it talks about like the buyers by type. And what we saw like the last 5, like almost, completely different freight markets, between 2020 to 2024. But what we saw during each of those freight markets, no matter what was happening in the economy, no matter what was happening in the freight market, 85%, this is our internal anecdotal data, but this is a pretty good amount of volume of activity. 85% of the offers year over year came from acquirers that were in or had some connection to the T&L space already. And so
Okay.
I think that when we're thinking about developing relationships with buyers, we know that there's a high probability that the people that are going to do most of the acquiring already have an existing interest in this space. So from our standpoint, the way that we think about getting upstream and bringing value to our clients, it's why we go to 40 to 50 different industry events in a given year across North America, because like we know that we want to get upstream with these relationships. And for us, it's not about like, what do you want to, are you buying what you want? What do you want to buy? That's not really what it's about. What we really want to know is, what problems are you trying to solve as a company? You're trying to grow. You're trying to, in some cases, they're saying like, well, we want to diversify because we felt so much exposure over the last 2 years. So as we think about growth, like this, we're thinking about adjacent markets. We're open to what that is. And so by taking that approach to the market, what we're learning is like, okay, that there is more flexibility on what that could look like. So if they would have just told me exactly what they wanted or what they've done in the past, that would have prevented me from bringing a client of mine who could otherwise probably been a very good fit. So what we're trying to do is to get way upstream with those relationships, trying to understand where they're taking their business and why. If acquisitions is going to play a role, how? But more so, we don't want to limit any possibilities. If we understand the problems that they're going to solve, in many cases, we can bring an acquisition that is a potential solution to that problem. And as long as neither of us, place any limitations on that, a lot of really exciting things can happen. So that's a kind of our thesis around developing relationships with buyers that ultimately adds more value to our sell side relationships.
Okay. Very interesting. Spencer, for like 2025, do you foresee maybe RXO doing more acquisitions? Because that acquisition of Coyote Logistics was huge last year. I'm wondering also, like, from just publicly traded companies from the logistics space, do you foresee them just like continuously acquiring? I'm guessing that's the case, but like anything that you're maybe have a perspective on that like is unique to our audience that like you'd like to share?
Yeah, we have a handful of transactions that are kind of in that 20 million EBITDA range that we represent right now, and we're very strong engagement from most of the publicly traded companies, quite frankly. But
Okay.
I would be I don't know, hesitant to just kind of generalize the whole market. I think that if anybody, I think the most common characteristic coming out of the last 36 months is that number one, you got to grow. You got to catch up. There's a lot, I think shareholders demand it. But the second part of it, I think the shareholders are demanding disciplined growth. If you're going to go out, you need to make sure that at a board level that there's alignment with what you're doing and why. So I think that I think some people are dialed in right now at the publicly traded level of companies. And we're hearing that like, this is our plan. And I think that there's, a large portion of others that are wanting to grow. They know that acquisition is going to play a role in that. But, I think they're still kind of feeling out, maybe, and probably will continue to through the rest of 2025, like what are going to be the right plays, because some don't want to dink and dunk. They want to make large transformational transactions. And it may not be clear what that right strategic profile is yet. So I think it's a little bit of a mixed bag.
Okay. Got it. Christian, what's going on your end over there? Just
I'm
kinda chilling.
listening. I'm absorbing all this that Spencer's sharing, which is obviously super interesting because I don't do anything on the M&A side. I'm not at that point in my life
So-
yet, but hopefully at some point can be. Spencer,
Spencer,
what do you do for? Go ahead.
I'm wondering. Sorry, Christian, for interrupting. So, Spencer, both Christian and I are co-founders of Freight Caviar. We're also co-founders of Shipper CRM, a SaaS product in the freight tech industry that we sell freight brokerages. Curious if we could use this time, a little bit of this time, for some advisory, if you're able, allow it, in a sense of if you could just give us some tips, maybe
Public
how
advice.
to become a more, I guess, what is it called? A company that could sell for higher valuations, multiples. We're not looking to sell right now, but one day probably we'll want to. So just curious, if there's anything you want to share with us publicly that is on that side of things.
Well, step one, I would find some way to partner with Will Jenkins. That would be step one. And
We are
well, I really like that. I really like that move by you guys. I think that's a really great play. I think, and why I think it's important because no matter what happens, no matter how technology evolves, I think the winners of the elite organizations are still going to involve people who are elite sales professionals. I still believe that. And so, so I think that's going to be core. And those that have those core competencies, I think will have a huge advantage to kind of navigate through the kind of overwhelming options of technology and things that you can do to create efficiency. So understanding that core competency moving forward. But I think that I mentioned discipline earlier. I think that I did an interview with Pierre Mathieu, who's a principal at Blue Jay Capital. They acquired large asset light deal from us, Priority Current Experts, about 1.5 years ago. And in my interview with him on the Hot Seat podcast, we were asking about when you're a private equity, what are you looking for? What's the most important thing as you're investing in companies? And there's two things that he said. He's like, number one, we're looking at the management team and their capabilities, because any private equity group that's going to invest in you, they don't they're not looking to maintain. They want to, they have to produce a return to their fund, and so they need to go to 3 to 4x. And so what they're really evaluating, it's a lot easier to make that investment if the existing leadership team and management team have the capability to go 3 or 4x. If they're going to have to replace that entire management team because they don't have the talent, experience, or energy or interest in doing what's required to do that, then they're going to have to replace those people, which just may invite too much risk to do the transaction at all. So number one, you got to have the right leadership, and they need to have the right capability to take the business to 3 to 4. So as you're building out your team, you need to be bringing on A players that cannot just go at 10%. They need to have the capacity to go 3 or 4x the next 5 years. So that's step one. And number two, I'll never forget this, and I've said this many times since then. He says, great companies understand their core truths about their business. And so, and what he meant by that is, if we're sitting face to face and I start asking you questions about why is this your best customer? Why do your customers stick? Why do some of your employees leave and some stay for 5 years? You understand exactly what is most true about your business and why. Because when you understand at a foundational level, even the imperfections, that's even more understand. We're not good at this. What that allows you to do is to stay highly disciplined in the way that you move forward, protecting yourself from the things that present risk and double downing on the things that are strengths. And then, when you're partnering up with a private equity group and you say, we know for a fact this is not where we're good, then that provides a way for an investor to come in and provide complementary expertise to help elevate the business. But you can't package that, and you can't do anything with that if you don't really know what it is and you don't live it out every day. So those two things, I mean, those are freebies, guys. But I think in terms of like making sure you get the right leadership team and making sure that you understand the core truths about your business and what makes it go, what makes it special, and what are the things that are holding it back. Those are, I mean, it sounds so simple, but you would be surprised of how many companies, and specifically freight brokerages, that don't know those things. And they may even have great companies, but it's the absence of knowing it is what prevents them from being a really special company.
That's actually really good, really well put, and really good advice. The way that you framed it is kind of just being honest with knowing what are the weak points, I guess, of the business, where you're strong, where you're not, is a really important thing. And obviously, it's pretty public now that Will joined the team as a partner investor, and just having somebody at his caliber being able, like, advising us on all types of decisions, really. Him going through that himself at his previous company, all the way up until exit, it's people like that are obviously, first off, hard to come by, but second, it becomes an invaluable resource to prevent you from having to make mistakes that they made in their, let's say, in their initial companies as well too. So honestly, saves a lot of money too.
No, I think that, like I said, I love the move by you guys.
I call him General Jenkins. Brute force him. Like,
exactly.
It's good. Yeah. No, Will is amazing.
That we're doubling down. We're definitely doubling down on the partnership, because we believe pretty strongly too that in this new kind of era that we're all learning about every day, right? Where the technology is progressing at a rate that we really haven't ever seen it, period, before.
Yeah.
The most dominant component that really has a very, very stable footing in any future kind of outlook would be the sales side of any business, right? The relationships, the friendships that you have, the people that and even if you have very sophisticated technology at your company, and you still know people, and that other people that you do know may need services. And staying within network, I think, is always something that people generally try to gravitate towards. It's like kind of like on a trust basis. It's who do you know in your most immediate network that can kind of provide you with some help. And over time, the sales piece is going to be the most, I think, critical, which is where we continue to double down on. So
great work.
Great advice.
Spencer, thank you so much for joining us today. Any final thoughts or conclusions? Actually, I did want to ask you, any books or podcasts that you recommend to us young entrepreneurs?
This is for you Gen Zers. I just read this book called Super Communicators, and I think it's and this kind of falls into the sales thing, and because I do think that in the world of hyper efficiency communication, there's so many things that when we're trying to mobilize, if you're a business leader trying to mobilize teams to go create value, to go deliver experiences for your customers, I think being able to communicate, more specifically to connect, has never been more critical. And so I would recommend that. It's a good read. Some of the stuff, I mean, it's pretty basic, but I think for me, I found it very timely, because there's no better time to cut through all the noise than to figure out how to connect with other human beings and get to the point and find out, like, what are you working on? What problems are you trying to solve? I think this book does a great job of providing some tangible tools to kind of elevate your game in that area, and to kind of piggyback around all the stuff that we said. It's just, I think that is, if you're going to double down on any core competency, communication, I think that's going to be key.
I don't know if that's advice strictly for Gen Zers, because I could definitely use some extra knowledge on that front myself as well. So I will be picking up the copy pretty much immediately. So
nice.
It's a good read.
Spencer, any podcasts you listen to regularly? Doesn't have to be business. Anything that you like to listen to.
There's a podcast, and he's a friend, but I really like what he does. It's called The Wow Factor, and it's a friend of mine. His name's Brad Formsma, and he interviews a lot of there are a lot of Christian business leaders, but in every podcast, he kind of ends it up like, what's your wow? And that's your word of wisdom. And I think that like he's had a couple hundred different episodes, but when you have people from either Hobby Lobby or In-N-Out Burger or whoever else, and you're kind of getting like simplified or synthesized into like one word of wisdom, like, and you can kind of like leave an episode with one of those things. I just think that it's just very practical. It's very interesting, and then I think one of the characteristics, most of these people try to use their businesses to be generous in the way that they do business, the way that they serve, and so I think you get to learn about a lot of cool people. I think that's one, and I think that there's some practical application that comes from that. So the wow factor is just kind of one of those sleepers that I think is pretty good.
Appreciate that. Well, thank you for the recommendation, Spencer. Thanks for joining us today on Freight Gong Friday. Wishing you a wonderful rest of your day and your weekends. Enjoy the father-daughter dance with your daughters, and wishing you an amazing weekend. Thank you so much for joining us again.
Thanks, Spencer.
Thanks for having me, guys. Good to be with you.
Take care.
Take care.